TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, into the breach do we go, dear friends.
The following takes place between 2 p.m. and 3 p.m.
Yeah, there we are. So what do we have? Well, we're off a little less than 4 points on the S&P. Cash Dow's off 45. NASDAQ's down just 2.5 points. So kind of a quiet Friday after a lot of indigestion yesterday. Volume, as we did push lower earlier in the day, is just 2 billion shares. So kind of a quiet Friday. Of course, comparing that to options expiration in the past. And then, of course, looking for options expiration next Friday on the 17th. So we're going to have some action. We're going to have some fun here in this next week. I suspect we're going to go up there and test the 2600 area exactly, if not blow through it, going through the end of the year. It's very tough when you get this is kind of like that goal line defense. It's very tough to get people to start selling out at the end of the year. If they think that they can pay taxes the first part of next year and possibly sell. So you just get into about between now and the end of the year, you got about 1.5% bias. That's pretty hefty going into the end of the year. So is it huge? No, but it is there. It's just tough. If you're not already selling, when we get into about this next week, if we don't really crack this market, then generally we'll get kind of what we're talking about now, which is lighter volume. It kind of pans out. A lot of people that are short slowly have to cover into the end of the year, as they don't want to get into the last couple of days of before Christmas and have somebody drop a bomb on them. There's a lot of dubious news around this time that really starts taking off. Phony buyouts, just fake news, let's put it that way. Some real, but a lot of fake. And that's always one of the problems, because you don't know whether it's real or fake at the moment, and you have to go ahead and blink, and that's kind of the end of it. But anyway, just expecting us to kind of slowly move up here to the end of the day. Monday should be a much better indicator of which way we're going for next week than looking at today. But all things equal, kind of a no follow-through day. We'll talk about some of the earnings. NVIDIA, we were talking about that, why Basil was on the radio for Tom yesterday, and I said, well, man, I really didn't like everybody trying to get short this thing going into it. It's not up much. It's up 6%, but not much for NVIDIA. But as I said, we're probably coming into some kind of longer-term high, I suspect, on it. But who knows? It's probably going to be in the next 3 months or so when competition comes in. And a handful of other things going on, but we'll talk about all of those. And just a lot of quiet stuff going on. We'll be with Tom at 3:30 this afternoon, and we'll be doing the tech talk then, as we kind of just bat the ball around a bit on the infield, and kind of talk about some broad brush stuff, a little less technical, but that's kind of it. And as always, we'd like to start the day off with a little bit of history.
That it's all just a little bit of history repeating.
Today, you people are no longer maggots. Today, you are Marine. You're part of a brotherhood. from now on until the day you die, wherever you are, every Marine is your brother.
Well, Arlie Army is probably one of the guys that I met in Hollywood that I liked best. Man, what a guy and what a story. Would be a lot more colorful than most people would think. But if you ever hear his story, what he did after he got out of the military, pretty downright amazing. Anyway, on this day, the official birthday of the United States Marine Corps is on in 1775. That day when the Second Continental Congress established the Continental Marines with the following decree. 2 battalions of Marines will be raised, consisting of 1 colonel, 2 lieutenant colonels, 2 majors, and other officers, as usual in other regiments, that they consist of an equal number of privates as with other battalions, and particular care to be taken that no persons be appointed to offices or enlisted into said battalions, such as they are good seamen or so acquainted with maritime affairs as to be able to serve for and during the present war with Great Britain and the colonies, unless dismissed by Congress, and they be distinguished by the names of the 1st and 2nd Battalions of Marines.
All right, sweethearts, what are you waiting for? Breakfast in bed? Another glorious day in the Corps. Day in the Marine Corps is like a day on the farm. Every meal's a banquet. Every paycheck a fortune. Every formation a parade. I love the Corps.
I love those guys. Anyway, not much else going on. Like we said, we're going to get right into some charts today. Give me a call at 877-927-6648. Like to hear your dulcet tones on the phone. What is it? DVDA. Anyway, we've got a new high out here with NVIDIA. It is a valid breakout. Volume's okay, not great. It's going to hold this apparently till the end of the day. We'll talk more about this with Tom, but I went through the earnings call on it, and it's kind of illuminating. They're getting to a point that just a couple other companies have gotten to in technology, and we'll illuminate that at the 3:30 time frame where we talk technology with Tom OBrien. So up here, you got decent volume. What else do you have? No sign of this thing pulling back. The SMHs, we'll take a look and see how those reacted again. Just basically, it's holding the SMHs up. You really haven't busted a trend line out here yet. So there's not much out here to say. You did have a fairly decent pullback and lots of volume. But again, this is getting to the time at the end of the year where if these people didn't sell yesterday, it's going to be incredibly harder each day to get people to start bailing out of these high-tech stocks, and sets up a thing where normally you have some selling coming into the very first of the year, first days back in January, where you might make a good rip. But it's getting tougher and tougher to plead the short case without the Republicans totally bursting into flames and burning their tax bill up with it. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom OBrien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom OBrien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And a quick question from the den is, please tell us your thoughts on China's move to open up its financial sector to more foreign involvement. And I will tell you my first blush on it. I haven't thought about it a lot, but my first blush is everything that China's been doing for the last year is to curtail being able to move cash freely in and out of the country, from closing down Bitcoin exchanges to other things. The one thing that their communist roots have in the government are they want control. They want to be able to make people do things, and they don't want people doing off-the-books transactions, so to speak. And I was actually listening to something else during the day, and kind of weird to find out that the U.S. government's the exact same way. I know a guy that's really one of these guys that's a prepper. He's ready for the end of the world, and he's pretty much gone to paying everything with gold and all that kind of stuff. Well, he's got it all in a safety deposit box, but because he goes to the safety deposit box so many times, like 3 or 4 times a month, to do all his stuff, bring his gold out, ship it out, get a check for everything else, that he's been reported to the IRS and the government. If you go to, I didn't ever know this, but if you go to the bank and to your safety deposit box so many times, the banks have to fill out forms and rat you out for going to it, thinking that, that's probably where you're heading. You're putting your drug money. I never knew that. Something I learned new, but yeah, it's from not being able to do anything. It used to be $10,000. I think it's now $5,000 in cash businesses you get reported. I actually sold something. Guy wanted me to give me cash. I said, no, I want a check. Can you imagine that? I wanted a check because I didn't want like 20 grand worth of money that might have cocaine all over it ending up in my bank account. That's been a while ago, but it's it's one of these things you have to just think of. But to me, the first thing for government is always control. That's what they want. They want control of people. And one of the reasons why the Second Amendment is one of the ones that we should cherish wisely out there, because I'm not really afraid too much for my personal security. I'm always worried about somebody who thinks that they know more than the people that they represent. And yeah, that's why. So what else do we have going on out here? We'll look at a few ones. Disney was actually down $3-4 most of the earnings call. They said that they were going to get into Netflix's business. And of course, Netflix, you don't really know whether this thing is down on, what would you call it? Netflix is down on more allegations. Maybe that's the way to put it. But Disney's certainly not up because of its earnings call. But this is pretty much where you want to pull the trigger on this thing if you did want to go short. This is down down versus the gap down from August 9th. That came down on 28 million shares. You're back into it with 12 million shares. I'd give it 3 more days, but if you're thinking this thing heads south, it certainly could. I'm not banking on the Star Wars movie doing very well, and they're letting another couple hundred ESPN employees go away. But the reason it's higher is they're getting into streaming, and made a few more announcements about that. My guess is that's probably just going to hold it up a little while. I think December the 17th for the Star Wars movie, it'll probably do okay. But my guess is it's not going to be a great movie when you have directors leave in the stream. This thing, again, very hard to get people to sell going into the end of the year. And at the same time, if you're short, you got a lot of people that are on the wrong side of this since August 9th. So watch for this thing go up on no volume come January 1st. I'd be looking at Disney as a possible short. We'll watch how it trades in the near future. But my thought is that not only is Disney and Netflix going to be in there, there's Hulu. There's no real barrier to entry. And that's what I'm going to talk about with Tom in the next hour. Let's take a quick look at Netflix and FLX. Now, Netflix has one of its biggest investments in something that they produce that no one else has, House of Cards. So what happens when you get something like House of Cards that blows up in their face? I've talked about this ad nauseum, but that is, for some reason, Disney as a content company gets a much, much higher multiple than it probably should get. Netflix is also in that category. If anybody can do what you're doing, there is no real barriers to entry. We'll talk about why Netflix has probably the best system and maybe even technology. But, man, it is kind of tough for me to see that this thing is not trading back, or it is now trading back below the 191.50, which had been kind of the high from July 21st. Fully valued, and then some. The problem is, if you have 10 cars and they all sell at the auction block, and one's a little bit better than the other, and one's got a little more miles, and one's got a better color, you can kind of use a rule of thumb and say, okay, that's what people are interested. That's not what people are interested. When you have a single company that does what Netflix does, no one really, as a standalone company, does exactly what Netflix does. Amazon really, 98% of what it does is shipping products and being a web service for everyone. 2% of it has to do right now with what they're doing, although they're going to get more into it. But there's not a lot for Netflix to fall back on if Disney, as they say, is going to be looking at a less expensive alternative than Netflix. So kind of tough to figure out. Down on a little volume today. Again, these things are fairly close to their highs. There's not a lot of pressure on these things. But if you're looking at a thing that could actually flip this market, it could be people that going, okay, I want to sell this. I'm not going to pay taxes this year, but I'm going to hold off to January 2nd. And we'll take a look at that. Okay. What else? There's a few other things I wanted to take a look at. Okay, dollars down 12 cents. I got an email wanting me to look at the GLD. And what do we have gold down here? $11.60. People are then talking about a fairly decent move on the downside in gold. I've got a little picture that I'm going to show when we come back. I've talked about it before. I don't think anything's changed. I haven't played it either long or short. But we'll be back and we'll look at what I think is the longer term on gold and what you should do. Be back in a minute. Give me a call, 877-927-6648.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Take a quick check of the markets, and then we'll get into some gold. We're just off 2 points now in the S&P cash. Probably going to close out the day unchanged. Nasdaq's up 1, Dow's still off 35. It looked to me at the very beginning of last night that with Disney, it would probably at least put 10 points down into the Dow. So that being up, actually probably a little bit better than you would think. Let's get into this gold. We've talked about it before, what I like to trade. Not the only way to trade gold, but one of the ways I like to trade it, because I don't trade it every day, is get this up here. And over here, there we go. Here's the GLD. We've got kind of a big pattern out here. We didn't make a lower low back on this 120.18 in the GLD. It wasn't that much more. It was 119.78. But you've got kind of, you know, a higher low, and then you kind of bounce here. You got to have a lot of nothing. But to me, this thing certainly smacked of a big triangle. And some people, I guess, call them flags. But to me, these things are all, I kind of see the triangle pattern in it. And to me, the thing that would be the best if I wanted to go long gold, and I think that there's some things lining up that would make gold a nice buy into next year, but probably kind of tough right now. What I want this thing to do is come down here and cut below these lines that I have up here as the triangle, and then kind of start moving back up. I want a false breakout to the downside, and these triangle patterns seem to be the best way to play those if you're not trying to intraday trade these things in and out. If you're trying to buy these things and go for, you know, 14, 21 days or something in a trade, do that. But to me, if this thing busts out on the high side, I'd be more thinking about shorting it. This thing bounces out to the bottom side on light volume and starts turning back up, I think the best risk reward would be had there. But yeah, I know a lot of people don't trade the way I do. There's more than one way to skin a cat, isn't there? So let's take a look at some other things that we have people talking about today. Wanted to look at some other ones. Hang on just a second. I don't have it up. We looked at all the earnings yesterday for next week, and I wanted to look at get my list of stuff up here. I forgot, or I closed this window, but we will get it. There we go. Okay. Well, I got a question in here now about crude. The Baker Hughes numbers were up by 7. Did I say 7 earlier? So you've got a little bit of supply coming in there. I don't see anything that changes right off the bat. But as prices in crude continue to stay high, you're going to see some of these rigs that are ready. Every dollar higher pretty much puts another rig to work. We're off 33 cents today. Not a big deal. Not a lot of movement in it. But if we've got 7 this week and we get another 5 or 10 next week, that's going to start putting some supply at least on the West Texas. Of course, won't do much for the Brent, but certainly going to continue to see pressure on the oil if we get into one more week of that, and we've got a lot more going on. Going into the winter, a little tougher to get some of those shale producers out there producing at full power. Colder weather makes it harder to get the crude out of the shale anyway. But I think they're going to probably somewhere around the $50 level looks like where they can produce that shale oil and still make a buck or two. So every dollar above that pretty much means that they're going to add some more. But I'll look at more of those drillers over the weekend in the full report. See if there was anything else. Oh, I got to go back to this. Cisco is lower. We talked about this one going into earnings next week. It's off a little bit. It's cutting some employees. Generally going to earnings when they start cutting employees means that these companies are probably going to be fairly close at making their earnings. Means that they're going to start at least trimming around the engine edges to make people a little happier. I don't think Cisco does much of anything into earnings next week. If it's up a buck or down a buck, probably not a big deal from this price. But it's hanging out here at the highs. You have lots of volume. You have a high volume high. I continue to see much more competition coming in the router business. And especially from, some of the European companies that are offering some of the products far discounted under Cisco's sales. So if you're a big Fortune 500 company, you're probably still buying Cisco, but it's the systems where they go, well, I think we can live without a Cisco router. We'll get the cheaper router that seemed to be kind of edging out what Cisco did. Of course, business in all of this is good. It's just whether or not it's going to be that great. Cisco has just never really impressed me as a company that can just start turning routers into money at will. It's not something you buy because you want it. It's something you buy because you have it or need it. And that's normally, a lot of time people trying to get cash together. Any pullback in the market is generally a very big negative to Cisco, because the first thing they do is start cutting expansion when companies start having problems. And guess what? At $5,500 a router for their flagship router, it's an easy thing to cut 20 of those things out. And my God, you got $100,000. So it's an easy thing to say no to by people in that. Okay, what else do we have out here? I wanted to look at HTZ. Hertz came out with earnings after the bell last night. A lot of people have been pounding on this short. It popped a little higher because earnings were a little bit better than everybody thought. And, of course, far too many people piling into this after Avis's debacle. This is another one where I think people just got in front of it. Probably wasn't a bad, short for the day out here. But, again, far too many people, at least for me, are shorting this right now. It's not as bad as it could be. And, again, this is one of these companies you may want to look at. Can you make 10, 15% on your money? That'd be probably stretching it with Hertz. But Hertz and Avis kind of a little worse off because it got really hammered. But that's car. But some of these things, this one, you've got a lot of losers in Avis. Much tougher for Hertz to see people push that. That may be a short squeeze opportunity. I'm going to keep an eye on those. We'll be back after this.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. 9190. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how EverBank can help keep your money thriving just the way you want. Is growing your money a priority? EverBank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? EverBank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
I have a question about the shippers. We'll look at FedEx first and then UPS. The question is whether these things are forming a bottom. Well, you're certainly in the sweet spot of them making a lot of money. We talked about how Amazon is really starting to raise its presence in its own aircraft so that it can get around UPS and FedEx. But come Christmas, it doesn't really matter. They're going to need the ability to ship every package. And so Christmas and this quarter is going to be fairly good for FedEx and UPS, although they've kind of warned that, it's not going to be like it was in the years past. We're going to see a little bit more of Amazon getting into shipping their own packages. Question is whether or not these things are starting to look like they could bottom. They could. And the thing is that they could just go sideways. What I want is something that's bottom and also has a fairly high negative short interest into these things as volume starts to decrease every day after Thanksgiving into Christmas. Shorts normally will start getting off the short side, and you have those natural buyers to actually push a stock up. What you don't have in FedEx or UPS, we'll look at UPS real quick, is a lot of short interest. These things are not really building a lot, and so maybe you get a good push on some good news of everybody buying stuff for Amazon, and they have to ship through United Parcel or FedEx, either one. But there isn't a lot of upside pain to be had from shorts when this does go up. And that's one of the things as volume starts to decline in the end of the year that I start looking for. So, yeah, is it back in here? Can it get back into the trading range? Can it bounce a bit? For me, the risk reward has to do with I want some people on my side, and those would be the shorts going into the end of the year. And that's somewhat problematic. So, see what you see there. Aaron's rents. I always keep an eye on this one because if things start getting weak, especially in the lower income brackets in the United States, this is one that seems to do extremely well. This did pop on earnings. And probably because, again, everybody was a little too bearish on it. Still think that this thing could get down to $33. I continue to keep an eye on this and see whether or not there is a lot of weakness. Actually, the weakness in this one says that the economy is getting better. You had a very good leg off that October 5th high back down to this November 7th low at 34.29. And that energy really did increase. You had a huge gap down, actually, a couple of them in that. You've had one gap up. It's not on much juice. But that $33 level out here, if we think that the economy is going to pull back or the stock market's going to pull back, then I think one of the things you would like to see also is that comes with this maybe somewhere around 33 bucks, and haven't seen much on that. Let's see what else out here. Okay, what do we have? Handful of other things to see. Guess I probably should have been looking at this stuff during a break, but I got distracted. Been talking to Tom OBrien during his shows a little bit about these shippers. And you get the Baltic Dry Index that goes through the roof. These things look like a heartbeat monitor to some extent. DCIX is Dana Shipping. And you continue to see these things just rip out of nowhere after not doing anything for a long time. And of course, the problem is these things have had so many reverse splits that there are not many shares left. And well, they kind of set everybody up. We saw that in dries over the last year and now in this one. So you see a lot of movement in these things, but there's not really much there. And if you're making money on these things, one thing you got to make sure is before these things turn, you got to be out of them, because there's no real buying. When these things do turn, they just fall like a souffle. So keep an eye on those. I would think that these things could get to profitability maybe with the Baltic Dry Index that continues to be fairly strong, but maybe there's just so much overhang in this business that it just doesn't matter anymore. The metals had looked fairly weak as of even a week and a half ago. A lot of these things had set up and started to look a little weaker, like U.S. Steel. We'll look at that one next. Chalco Mittal, Chalco Mittal is up about 5% today. Nice gap up. Didn't break a new high today. Volume's not all that exciting either, but at least it didn't go down. If you're long this thing, looks like it's going to go test $30.50, the October 24th high. But a lot of these metals, maybe not this one, it was like Kennametal and U.S. Steel, made some fairly bearish-looking chart patterns with no volume. You spiked on U.S. Steel November 1st, 29.33, and this thing just kind of rolled off. A little pop-up here today in sympathy, but not a lot going on out here. And I keep on thinking, well, if the Baltic Dry Index is up, they're going to be shipping something, and of course a lot of that is iron ore, wheat, and other things. But these things really don't there's something going on. Either the Baltic Index is wrong or these steel stocks are wrong. I'm not exactly sure which one it is, but I think we're probably going to get some kind of signal here in the next few weeks that is going to tell us one or the other is not quite telling the truth. Okay. Altus, its CEO has resigned. Doesn't seem to be doing a lot for this one today. Maybe it's been doing so horribly that no one says anything about it. And what else do we have? It could be under the column of who it could have been worse, is J.C. Penney's. Again, a lot of people on these stocks that are just going to nothing have continued to sit on these things. Earnings weren't really that good. It was just not as bad as everybody feared. Maybe they've got 6 months instead of 3 months after the first of the year. Maybe they could make it to next September. Kind of hard to tell, but a little bounce back up into this gap down from the 27th of October. That gap down had 94 million shares. You're up here with this 42 million shares, of course. In a $3 stock, not a lot of people shorting it. So any kind of move generally gets the shorts off of their behind and covering. But if you were to short this thing at 30 bucks, and you can cover down here around $2 going into earnings, I think you're just kind of nuts. but it's one man's opinion. Okay. On some of these weaker stocks, I've been trying to short Western Digital for a while. It's got a little pop out here today. We'll talk about the reasons why when we come back in the last segment. And remember, I'll be in with the Tom OBrien at 3:30 today for his segment.
Tom OBrien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom OBrien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Hi, folks, this is Tom OBrien. Come join me next hour as we bisect and dissect these markets, right here on TFNN. Wow!
And we got a question that in. Do I have anything that I really think that you want to short here? And the answer is probably not. You need, again, it's very tough in the last part of the year to find a stock that's kind of up, that hadn't already crashed already, and you get a little bit more selling or a little bit more tax selling in the next week or so. But we're going to have some kind of big event, the tax bill blow up, a nuclear weapon, a global geopolitical event to make me think that there's going to be a lot of money in shorting anything into the end of the year. The stocks that have already been hammered have been hammered. The stocks at highs are going to be tough to sell. You need one that kind of has pulled back a little bit and maybe has some bad news coming. Just not a lot of stocks that I think. I mean, we got Wednesday next week, Thursday next week's the end of earnings. So you're going to need a catalyst to blow everything up. If you're betting on Congress, I guess that's one thing. I just don't know how to bet on a handful of people making a single decision. I'm much better at markets, and markets, I don't know if they've priced this in or not. I'm thinking that probably not, but at the same time, I think the Republicans have priced in the cost of failure on this, and as begrudgingly as they are, and as watered down as the bill may be, they're probably going to pass something. So, yeah, it's just tough here for me. I've looked at a lot of stuff. I'm actually long one stock on the daily newsletter and a couple on the other side. But to me, if you're looking for a short, maybe there's a few things out there, but for the most part, I think the best bet is as things slow down, markets start selling off, is find stocks that are highly short, that are done going down at least for the year, and let those natural buyers kind of move it up into the end of the year. And look at January as a new time, start shorting. Maybe that'll change, but right now I don't see that much. In the meantime, sell when you can, not when you have to. We'll see you Monday. Same bat channel, same bat time.
Larry Pezzavento and John Jameson are teaming up for a live hour-long webinar Wednesday, November 15th at 5:30 p.m. Eastern Time, titled The Hidden Secrets Behind Trading and Investing in Cryptocurrencies. Cryptocurrencies are some of the most volatile trading markets in the world right now, and this is a webinar that you will not want to miss. In this live 60-minute webinar, John and Larry will discuss a variety of topics, including where cryptocurrencies trade and how to get started, how to recognize supply and demand in cryptocurrencies, and the difference between Bitcoin and Ethereum, and why knowing this one piece of information puts you in the top 1% of cryptocurrency traders, as well as many more topics. Visit the front page of TFNN.com for all the information and to sign up today for Fibonacci 24/7, and we'll see you Wednesday, November 15th for the hidden secrets behind trading and investing in cryptocurrencies.